So the taxation of stock options was supposed to change effective January 1st, 2020. That has been halted. So this is what you should be thinking about before the changes do come into effect. As of now, there is no date when the change will occur. So this is what we need to start thinking about. So in this video, we will talk about what an option is and how it's currently taxed and why the changes are going through. So what is a stock option? It's essentially an option to buy a stock at a designated price. And let's talk about how the taxation of stock options is and why stock options are even a form of compensation. So essentially, stock options are a form of compensation that can be awarded or attract talented employees to a company that may be in a position where they can't pay a high salary due to cash flow or their startup company. So stock options become a form of compensation to attract and retain these types of talented employees. So how's the taxation implemented today? So essentially how the taxation works is almost at a capital gains rate. So when a stock option is implemented, it's the difference between the price that was exercised and the price that the stock option was purchased at. This includes the strike price as well as the price paid for that option. So the difference between these two numbers is reported as an employee taxable benefit. However, there's also a stock option deduction that's awarded at half the amount of the benefit. So essentially, half of the income is taxed, which in essence is the same as a capital gains rate. And so why is this being reviewed? As you know, it is the Government of Canada's mandate to try to raise tax revenue. And so as you can see their patterns over the last few years, they have targeted the wealthy people in Canada. And if you look at the stats going back to 2017, out of all the stock options that were exercised that year, 6% of the Canadians made up for 2/3 of the $1.3 billion of stock options that were exercised. So out of all the stock options exercised, 1.3 billion was eluded or caused from only 6% of Canadians. That's the market that they're going to go after now. So the Government of Canada is saying that they will leave those lower income earners, they'll leave the startup companies alone with the preferential tax treatment. They are going to impact the wealthy, so people with higher income, and the large companies that are established already. So that's the difference, and what they're trying to say is they're trying to make a fair tax treatment. I don't know who this is fair to. Their stock options, they are targeting the wealthy, not the startup lower company. So I don't know how this is fair or what their definition of fair means. So in our next video, we will get into the planning opportunities, how the new taxation will work.